Okay, thank you everybody for joining today's webinar. So today the agenda is fairly simple. Let me look at it. We'll look at this week's action in crude oil. In particular, we will look at Mondays, Tuesdays, and Wednesdays action. Hopefully we'll be able to cover it quickly as we started a little late. So as a general remark for everybody, if you are new to order flow, we advise our customers that it does take time, dedication to learn how to read order flow. And therefore we also provide one-on-one discussions. If you would like a one-on-one discussion, you can schedule it with our support. So you can email to support@hiddenforceflux.com and request a Skype discussion. It does help people to get up to speed much faster than without it. But when you acquire that skill of reading order flow, you will also understand much better how the market moves and why it moves the way it does. So some moves that may look completely random will make sense. Of course, you cannot explain every single move in the market. That would be nice. But you can get a much better idea of the market structure and why the market moves the way it does. So before we go any further, let me read this standard disclaimer. HFF are not registered advisors by any state law and never presented themselves as such. Under no circumstances shall HFF be liable for any loss or damage the user incurs as a result of any trading or investment based on any information or material received through any HFF software, website, or presentation. So with that out of the way, let's look at some action in crude oil from this week. There were many interesting situations, and I want to elaborate on how those situations go hand in hand with the rules that we posted on our website in the tips and tricks section. So let's look at what happened in crude on Monday. Let me make this visible area properly adjusted. I will also show you some market replay of some interesting events that I will point out. So this is Monday's cumulative delta chart for crude oil contract CLN4. And, when you look at this chart, the delta chart in general for us is used as a big picture chart with important reference points for future price action. So on that chart you will see what we call localized delta divergences, and you will also see order flow support and resistance in this case. So there is just a single localized long delta divergence, this green dot right at 102.40 area for crude oil at that time, and nothing else as far as delta events. But still, it's really interesting to look at what happened in this area as the market was trying to go through 102.40, where you see this localized long delta divergence with an immediate opposite reaction. So on our website, one of the rules that we mention is that if you are trying to fade a move, if you want to use delta, you try to look for a failure to continue, and you try to get in on the first retrace close to that level. So in this particular example, how would our rules apply to this failure of long delta divergence to go up? So we have a localized long delta divergence with an immediate opposite reaction, which also is fairly sizable. It's almost 30 ticks in a few minutes. So this is a quick rejection of this level. And so as soon as you see this happen, you see a failed localized long delta divergence. you should think potentially that that might be a candidate to short when the price first time revisits that area. So how would it look in the footprint chart? We'll look at it in a second. Before then, I will mention that in this particular case, if you just blindly put an order to short somewhere below this 102.40 area, it would also depend on what your stop is. It actually breached it by 7 ticks. So if you short it just below and your stop was maybe less than 10 ticks, most likely you would have been stopped out at exactly the top. Therefore, we also advise that people look at some additional confirmation that that move may actually be faded, so some additional signal. So overall, in order flow, we look for multiple signals or confirmations pointing to the same conclusion. So the first signal, so to speak, here would be a failed localized long delta divergence with a sizable opposite reaction. That's your first signal. So once you see that, then you start thinking, well, maybe we could go short around this 102.40 area when the price revisits it for the first time. But then you don't just put your order blindly in and hope that it's going to work out. There are some automated strategies that we have devised that actually do work like that, but for those you need to risk a little more than a manual trader would like to do. So when you see failed localized long delta divergence, when the price is coming near this level, you would want to see some sort of confirmation signal that indeed this is going to fail and then go down as it actually did in this case. And for that, the best way to do it is to keep an eye on our footprint chart. So let's look at the footprint chart from Monday around that time. Let me zoom it out first. So this is just big picture, our volume at price chart from Monday. Right in here is the area where we had the failed long delta divergence with an opposite reaction. And then price starts climbing back up. I will also show you what happened here right at this turn, but I'll get to that later. So let's zoom in a little bit. You see this is 102.40 level, and as price keeps coming back, 15 ticks below 102.25 roughly level, there is what you could call a cluster. It's not really displayed in any particular fashion, but if you watch crude oil every single day or your favorite instrument, then you will know what levels or what numbers are significant. So for crude oil, we flag any box which has a bid or ask volume higher than 100, because that's already significant enough. But you see, at 102.26 there was 90 contracts on the ask, another 90 one tick higher, then you had 90 on the bid, one tick higher, and another 100 here on the ask. So there was a fairly sizable pressure upwards, and this is still more than 10 ticks away from the 102.40 failed area. So what does that mean? That, to anyone who is used to reading order flow, means that once you are above this little area here, the pressure is to the upside, and you should look for an opposing signal, because when you're above this cluster of high ask volume, so to speak, the bulls are winning the fight, and you don't want to fight them too much. So you don't want to just post blindly a short order here just below 102.40 when you see this occurrence. So for example, using our rules from the website, we had the failed localized long delta divergence. We are getting close to the first retrace to that level, which is right here. But since we saw this cluster of high ask volumes, we don't put our short order just yet. We wait and see what happens. In the worst case, we'll miss it. But it's better than to be run over by the market just shooting upwards. So what happened right as it was getting to this level and actually breached it is also interesting. So we get through the 102.40 level on a big volume spike. Actually, if you saw this live, this was a big volume spike. This move happened very quickly. So if you had your short order right in here, who knows, maybe it would scare some people away. It wasn't much of a follow-through, only 9 ticks. But still, it would not be a good idea to put your short order here before, based on the high volume on the ask that we discussed. So, but how would you handle this situation? You would see this big volume spike with a cluster of algorithmic ask volume. We had 7 contracts on the ask algorithmic at 102.43, 54 at 102.44, and 5 at 102.45. So nice little cluster of algorithmic ask volume, and a high volume area at the same time. Not that surprising, because someone is trying to break out of that area. But in fact, they fail. As soon as it breaks out by a few ticks, it comes back. And now when it does come back, now you should start thinking, when you take all the previous order flow situations into account, that maybe this is really a good candidate for the short. Because it broke through, but not by much. It created algo ask volume, which in most situations is something that we like to fade. And as it was coming down, it also created this algo bid volume, which in this case is in fact a continuation signal. One more thing which supports this is that as soon as the price, I'll show this in a replay so that you can see how it actually played out in real time. I will speed it up a little bit. As soon as the price came back to 102.40, we had this algo bid volume 6 contracts created. Price went down, and as it came back up, we have this 55 contracts replenished on the ask, which means it's a pressure upward, but at the same time it means order flow resistance in this area. So smart volume loaded up on the ask exactly as it was going through this 102.40 area that we had designated before as a potential short. So this volume here, the 55 replenished on the ask, was indeed smart volume when you look at what happened subsequently. It was never even breached by a tick, and the price immediately goes down. And if you are still not in a short on this, because this happens rather fast, then now the 102.40 area becomes your potential short, because we had breached it by only a few ticks. We had a cluster of algo ask volumes, and as it was coming down, we had another algo bid volume, which is in this case a continuation signal, which was confirmed without a breach, and we also had this replenishment on the ask, which is a bearish signal in this situation if it does fail, as it did in this case. So this altogether is, a set of indications that we should go down from here. And when all this transpires and when the price is somewhere here, then you should quickly start thinking about shorting when it comes back here. It may happen, of course, that it never comes back to that area, in which case there will be no trade and you will have missed it. But generally, these areas tend to get retested. So this algo bid volume was immediately followed by a quick confirmation. But typically, price comes back to it at least one more time. So that's the area where, if it's going to hold, you will gain a low risk entry, which in this